Hey traders, welcome to the double shot. We are on the 7th of August. I got my coffee ready to go. Right here we have quite a few things to talk about here regarding the markets. As we're slowly progressing through this supposedly seasonally bearish month. We'll take a look at the price action here. I want to talk to you a little bit about natural gas, about the position that we open up there, and do a little bit of a portfolio review just on the active positions, and then take a look at some of these, go quickly to this kind of macro charts that we're watching pretty much on a daily basis. Just a couple of charts on the weekly, and then I want to show you some sentiment, some, option positioning here in terms of put call ratios and stuff like that. So let's jump straight on. I will begin with just a quick review of the S&P 500. That's been correcting here for the past several days. So ever since we had this kind of large bearish engulfing, the S&P 500 has been coming lower. In the Dow Jones, this actually made a new high and then we reversed. So again, this condition here came at a time when the markets were a little bit frothy, and we talked about kind of August being a little bit of a negative month overall. Actually, it's more of a 50-50, if you're kind of looking back in the history, but it's just was just a cautionary tale that something could start to to unfold in here, and we're looking. I'm going to have the wave counts later on this evening, but we're looking at it as a fourth wave pullback, and we're looking for this market to kind of get back above 4,600 and continue to move. So on Friday we failed to close above the 20-day moving average and pull back lower, and create a little bit of a inverted hammer here. And today we kind of gapped up, and we closed right at the 20, maybe on for low volume, so not a lot of strength, let's say, out of this move coming from a 50 RSI, but something encouraging. We'll see if they have power to kind of continue this. Accumulation distribution line is pretty much flat in here. So if we do continue to correct, I would expect, but you can see, I would expect the 4,400 level to be kind of, a strong, maybe all the way down to 4,350 on a spike, and then a close back above the 50-day, something like that possibly. But you can see these levels from around 20th of June, and then from the end of June, beginning of July, you have a couple of tests of that 4450 level, which kind of got retested almost, and we've been holding pretty nicely up there. So again, could be a decent opportunity to kind of re-enter the long side in the market. Maybe give it another day. If we can close, maybe another bullish day up here. I think, actually on Wednesday we have the CPI, so maybe that could be a catalyst that could push this markets above 4,600. I still need to, just tread lightly for a little bit in here, but I do like the reaction that we're seeing. Similar story on the Nasdaq, also was a bit weaker today, about 80 basis points. I think the S&P was 90 basis points on the rally. You can see that we're just kind of flattening out on the 20-day moving average, coming back to mid to 50. The trend is pretty much, unchanged. This looks like a simple ABC correction that could very well be resuming to the upside towards the end of this week. So again, I'm maintaining a pretty positive view. Again, the highs back here, this one and this one, you can see how it got, and that's what you want. Once you break up, you come back, retest these zones, and if they hold pretty well, then you're onwards and upwards to the next levels. So I continue to like that. Dow Jones had actually the best reaction today, up about 1%, 16, straight from the 20-day moving average. Didn't even come all the way to 34,500. Doesn't mean that it can, but the fact that we're holding here, remember, this is the one that's been the least strong, right, in actually breaking out, and it was a little bit delayed, and we were waiting for it for a long time, and we've been patiently waiting on this ABC. Look at this move in here, look at that, and then look at that. Right, they're very, very similar. So it's very possible that this could continue now, that you're actually moving back up. You almost overtake the highs of the previous daily candle here. I think it's got potential to break to the upside. So very nice reaction here on on Dow Jones without even touching exactly the 50 RSI on the daily time frames. Nasdaq 100, S&P 100, it's fairly okay. Transportation average just kind of slowing down here above the 20-day moving average. I continue to like that sector. Semiconductors, just again, you have a rising 50-day moving average. Remember, to kind of get a lot bearish, this thing has to turn, has to kind of make a move. And some people can say, well, look at Apple, kind of what happened in Apple, and I'll show you what this means. So Apple basically, if I go, and I'm just going to take a quick 2 seconds to talk about this, right? That's the 50-day moving average in Apple. Now, it broke after, the earnings came maybe as expected or a bit weaker or whatever, but maybe it was a little bit frothy all the way up there. We broke the 20, break straight to 50. But the trend doesn't change just like that, right? This whole thing here is not just going to crash all the way down to 143 for, no apparent reason. This topping, if there is a top or a larger correction or something happening in Apple, this will take time to unfold, which means that we're going to probably go back, retest the 50-day, maybe climb back above it, spend a few months, consolidating here, creating a little bit of a topping pattern, and then reverse lower. By that time, the 150-day will rally. So, look, Apple came back here towards 176. If we do get all the way up here to 165 in one straight shot, I'm going to buy really quickly. I don't think that's the case. But, this is the first test of this support, previous resistance. And I think we can probably going to hold here and move back. And then we're going to have to fight a little bit overhead supply again. But again, you're still having a rising 50-day moving average, right? That doesn't just disappear overnight. This will take time to curl back over, right? That means weeks until that happens. So going back to to kind of my presentation here. So that's kind of what's going on in the semiconductors. Very all on ABC, and we could be pushing to the upside. Look how nicely the 50-day RSI is supporting dips, right? When you're above the 50-day RSI, you are in a kind of bullish trending market. Looks pretty good. Mid caps, nice reaction as well. Small caps, they actually had a very weak sell-off overall, just a normal correction. And we seem to be turning there as well. Growth and value. And then Bitcoin is starting to react also, right? We're still long in this one. Multiple tests of this area, just coming back into the 150-day moving average. Let's see what happens. If we can climb back above 30K, I think we're probably going to move and break 31 and 32 next. That's kind of what I'm betting on. We're still long on Bitcoin, Ethereum, kind of flat. We need to get back above 1877 there to start to press on the acceleration a little bit more. And then, bonds sold off, came back, which means that yields actually failed. And this was a nice reversal, actually. If you look at the, I think on the weekly time frames looks better. If you look at the TNX, which is a 10-year yield, we touched about 4.2% and we reversed. Now we're trading 478. And, it's still kind of uptrending in here, but a lot of people got bullish very quickly, and I think the market will, will just kind of temper that sentiment. And then the dollar index also is reacting very well from a declining moving average, from a declining trend line in here, and you can see it a little bit better if we're looking here on Trading View. Here is where you have the declining trend line from the highs right there. And then you also have a declining 150-day moving average. Very nice, almost like a reversal pattern. I think what they call almost like an evening star formation. We'll see. Ideally, this can resolve to the downside and come back and move back towards 100. I think it's going to have quite a tough time to kind of break to this straight away and sustain that. So I think, with the dollar maybe weakening here, we can get the next leg up in the markets, maybe about 4,600 in the S&P 500. The message is a little bit mixed because you have the seasonality kind of fighting. You also have, obviously, you have some data, you have CPI, you had some weak labor numbers, sort of, right? So the Fed is like, okay, we can really hike, let's say, into September. And, you're up here at these levels, they're a bit frothy, especially on tech. So I still don't feel like, okay, I like the trend that it's up and it, I see these reactions, but I don't feel very strongly about, putting, heavy amounts of money to work on the market until I kind of get through this August period and kind of see how the market continues to react here from CPI and from some of these levels, right? There's other ratios that I'm watching, and I want those to kind of clean up a little bit. So again, we don't have to trade every single day, or something has to happen all the time. Sometimes the markets just kind of consolidate, just move sideways, a little bit correct. So we just have to kind of be patient and just get ready for the next attack. And that's why I decided to move on natural gas. I think there's a decent opportunity in there. I've been kind of watching the natural gas market here for a while. I also put it into the ETF portfolio here, right here to UNG, right? Forget some of these prices here are not updated, so I don't know what's going on with Google financing here, that it gives me some errors, but I'm going to update those and you will have an accurate representation of what these numbers mean. But we did put it up here today on UNG Nat Gas. So, I allowed for about an 11.5% decline. And the reason for that is because, if you're breaking back below 660 in here, right, that's this move back there. I think, that you have a failed move. But I mean, look at this. And let me just kind of take off the volume so you can kind of see it better. Right, look at this basing pattern in natural gas. And I'm going to get rid of this cursor as well. Beautiful move down, right? I mean, serious. I've been, watching traders try to buy natural gas, as it was kind of declining here to 10, 11 through Boyle and other, and this is what it can do to you, right? It doesn't have to rally. It can just kind of grind you to a hold for months on end, without necessarily having to rally. So, that's why, picking lows, it's such a tough thing to do because, you're not always getting a V-shape move out of the market. Yeah, you might get some spikes, but until the moving averages start to turn and create a base, you can be very premature and then, either have the money stuck or you remember some of these leverage ETFs, they eat away every single day, at that ratio with the underlying asset and at your funds. So, this pattern here looks much better. Right now you have a left shoulder, you have a head, you have a right shoulder, you have a neckline. Back in here, yeah, still a declining 150-day moving average, which is, a little bit of a problem. But the fact that we have gotten back above the 50 and the 20, that means that there could be a change in trend. Now, for this to kind of get back to a bullish move, might take a while, right? But the things are starting to warm up towards the bullish, part of this market, and I want to kind of be ready for this breakout. So I bought it here, if we move below these levels, right, I want to be out of there because, the premise is that these lows have to hold, and that's probably like an ABC move or a complex correction in here, right, after a 5-wave rally. And, if we're failing, then the premise of the trade is gone, and I want to be out, and then we'll reinitiate positions, on the next setup. But for now, I think that this could have some legs. We'll see. Maybe we'll find some resistance here above 8. But I'm looking for a move at least back towards 10, if not maybe even higher on the months to come. So we'll see how this goes. But that's kind of the idea on this. So I talked about the dollar. I talked about some of these markets that we were watching, about yields. I'll update you on gold and silver later on tonight, and on kind of the Bitcoin count. Although Bitcoin count, didn't really change a whole lot. We're still, there watching for a second wave pullback. So one more thing I wanted to show you on the weekly charts on the S&P 500, right? This looked like it's a scary candle as it's selling off from 4,600, but it's if you look at the rally back here, I mean, look how many of these you've had, and what the market does in uptrends, right? These are not necessarily signs of a full reversal in the market. Markets get frothy, a little bit overbought, whatever, right? People get sentiment-wise just a bit too excited, and then they're like, okay, let's punish these late longs, and flush out some of that sentiment, as I'll show you in a second, and then they move back to the upside. So you can see in here, right, bearish candle. You would have thought, hey, is the end of the world. This one as well, this one as well, followed by a bullish engulfing. Look at this one back here, right? Just very similar to that, followed by another day to the upside, and there is plenty of examples examples like that in uptrends when, you know, these type of candles kind of, you know, they're just part of a normal progression of a bullish market. So there's going to take a lot more than just this for this to be some kind of an ABC and then a crash lower to 3200, right? You have multiple levels. I mean, the path of least resistance remains to the upside here. The RSI on the weekly, you know, it's still pretty bullish here. I mean, there's no divergence. It looks pretty clean. The moving averages are trending up. Volume is good. You have support at 43. You have at 44.50. You know, you got support at 4200 if we break back below. So, you know, it's again, we're in a bullish type environment, and I wouldn't bet on bearishness. I would bet on bullishness, but wait for you know, some opportunities to come back, and you know, we took some profits, and you know, several trades that we've done, and some personal you know, items that I've had. I took some last week and a couple of weeks back. You know, but we can look at here, right? KBWB, Home Depot, Roku, Fortinet, you know, Roblox, you know, three times Russell, you know, even in China. So, you know, we've gotten out of some of this position. Look at the month of July, kind of how we traded all of that. And then, you know, here we are still holding banks in here, right? I mean, listen, we've got into banks on March 21st, right? We're still long those. Home Depot in April 20th, right? Up about 10%. You know, we took a couple of scares onto that stock, but it never trigger stops. You know, Zoom, it's, you know, holding. It's still a little bit iffy with Zoom. I mean, the earnings are going to come, but you listen, I have a trailing stop at 67. It is what it is at this point, right? I mean, it's not far. It's $1.66. If I get stopped out, you know, it is what it is. We'll reinitiate. You know, Costco, we've been in this one since May, end of May, you know, up 9%. Roku doing pretty well. Ethereum and Bitcoin, you know, are kind of lagging here, and natural gas is kind of late. Listen, I haven't traded much in this kind of active one that I keep with you guys here since middle of July, right? Ever since the market started to kind of feel a little toppy, you know, I just kind of pull back a little bit on the, you know, on the exposure. So that's kind of where we are on this positioning in here. Now, let's quickly take a look. So I talk about this. I want to show you a couple of things in here. So the S&P 500, and then I have the relative ratios between all the sectors and the S&P 500, right? And we talked about this, I think, last week or a couple of weeks ago before I went to California about this XLK SPX ratio, how it's, you know, starting to break down, how it's not moving higher, and then how, you know, that sector can start to underperform and it's pulling lower. But XLC, it's still doing good in a nice uptrend. XLY, it's still doing pretty good, still in a nice uptrend. You have XLF financials that, you know, I think the yield curve is starting to kind of steepen up again, and financials should benefit. You know, it seemed to have broken a little bit of this downtrend. So if financials participate, you know, you look at Dow, they could continue to, you know, to push this market higher. These other sectors, industrials, really haven't deteriorated a whole lot, just kind of being flat, but still pretty good. We're coming back into energy a little bit more. So we did put into our ETF this week, XOP, we put some uranium, clean energy. I'm still getting hit on that a couple of times already. But, you know, you got some nat gas, you got some oil and gas, uranium, again, you know, so exposure to a little bit more energy. Based on kind of what's been happening here with the oil. And then, you know, defensive sectors like XLU selling lower, XLV, you know, these are defensive stuff, right? It's still not pushing back to the upside. You want these things to outperform, you know, on a relative basis, the S&P 500 for the market to become defensive, and it's really not happening. XLP is still down, you know, although basing out a little bit, but not much there. So again, there's these indicators are still showing you that you're into a, you know, into the middle of a bullish move in here, with a normal kind of summer pause maybe. Advanced decline line, you know, broke to new all-time highs back in July, the beginning of July, right, the federal holiday, and you know, we're straight up. You know, so as long as this, you know, this looks good, this tells you that there's more issues advancing than declining. There is a little bit of you know, a breadth divergence when you look at the 20-day moving average, 50-day, a little bit of you know, loss up in there, but nothing really significant, you know, just yet. So that's kind of what I wanted to show you. Also, the bullish percent index, which I've talked about as it was moving, 2-3 weeks ago, as it was breaking 70. And I said, listen, just because it's at 70, which is kind of the upper boundary of this indicator in terms of, where markets start to be a little frothy and start to react, that it can actually move up towards 80, and there's room to go, as shown here previously in different, rallies. And that's what we did. We just kind of went back to 80, and then the moment we hit that, we paused for a little bit for a few days, and then we sold off. Here's what the market did. So now we're kind of correcting some of that. Is it going to come all the way back here to 30? Nobody really knows. I mean, there's plenty of instances here when you have rallying markets, and I can go back and you'll see that it just bounces between 50 and 70, and the market just rallies. So these are, it's an indicator that has a lot more value when it reaches, let's say, very frothy territories like this hot zone between 70 and 80, and then, if it starts dropping below 50, into the 30s, then you kind of have to start to pay attention. My goodness, people are getting a little bit too bearish. Let's try to look for opportunities to the long side. So based on this, there still might be a little bit more downside, but again, I mean, you see back in here, right? It's coming and then it shoots back up. So we'll keep a close eye on that, and then take a look at what's going on in terms of kind of sentiment from the investors. This is the National Association of Active Investment Managers, fully invested in here. Just a lot of bulls. You need bulls for this market to push higher, right? Is it frothy? Maybe a little bit. I mean, you can see RIDEX flows to safety rarely reach these levels in here, which means that they're reducing a lot their defense, right? And I put a line at about, what is it, 0.10 or below that. But there were areas where you actually went much higher than that, right? We're at the 0.09, and you can actually get to 0.06. So there's still, could be still several weeks of bullishness before you might just kind of pull back again. Again, this could stay elevated for a long time. So again, based on this, a little bit frothy, but nothing too concerning, right? I would want to look for divergence in here and stuff like that, and then also see how we kind of clean up some of this bearish sentiment on this bullish sentiment on the equity put call ratio, which I talked about in the beginning, where you're basically coming back and, the market is starting to kind of buy puts again. There was a lot of, call buying as this thing was moving below 0.50. Again, far away from being, into the super frothy territory, let's say near 0.40 as it was, as this market was ramping higher after COVID, and you reach those kind of extreme levels. But, we dropped into, what was this, 0.51, let's see here. That's a 5-day moving average of it, but the lowest we've gone was 0.39 actually, right there. And then we quickly reversed higher. The dark line is basically kind of what's happening every single day, and this is a 5-day moving average of those swings, just to kind of clean up some of that mess. But here we are, people already starting to kind of buy puts again and getting bearish. And it could be very simple, be something like, like this here, right? You're just kind of going back and then, then back down. And you can do this for months on end. It doesn't necessarily mean that you're beginning, let's say, the next panic in the market where, puts are getting bought aggressively. So, something in here where we clean up a little bit of the sentiment, and I see that as actually as a positive sign. So again, thanks for watching. Let me know what you think, and tonight I'll write. I'm sorry, I was thinking about the pigeon and the statue, but I was going to write, the daily drip, where we take a look at LA wave counts on all these kind of major markets we're watching, and see if anything has changed up there with little commentary. So I'll talk to you tomorrow. Bye bye.